Hey guys, this is Kelly with Century 21. Hey, so the numbers for February of 2022 are out for the housing market here in Utah. We're going to be looking at Utah County housing market numbers specifically. So before we jump into that though, I just kind of want to give you guys a little idea of where I get my numbers from so that you know where my source is. So I get my numbers directly from the Utah Association of Realtors website. They have a place for realtors where they can come down and I can pull per county. I can pull all the different counties, and then I can every month I know when they drop the numbers about around the 10th or so, 10th, 11th, and then I go in and check those, and then I put them in my handy dandy Excel sheet, and which is set up for my calculations, right? So now you guys know where I get my numbers from. They're valid numbers, they're accurate numbers, and they're reliable numbers, okay? So looking at new listings for February of this year, so we have 858 new listings for February, which is down 23 listings from last month of 881, which is a 2.6% drop. New listings last year were at 801. So we are actually 7% higher this year than we were last year of the same time. And last year was a pretty good year. So we're already starting out pretty good this year. Days on market staying pretty consistent here, 21, 22 days. Under contracts, we have 841 under contracts. That's actually 51 contracts less than what it was last month, which means that we have a drop of 5.7% under contracts this month than last month. Closed sales at 617 for February. That's 18 more than we did last month. That's a 3% increase in closed sales. The big number here is the median price. So we went from $500,000 in January to now $519,455. That's a $19,455 jump. That is huge. That is huge. And I want to take just a second to explain what median price is. So let's start with average price. So average price is you take a population of numbers and you have them, they're kind of spread out on the spectrum, but and an average is you take the sum of all of the data points and then you divide that number by the number of data points, and that gives you an average. Okay. The problem with averages is that sometimes you have some really high numbers and sometimes you have some really low numbers, right? So if you have, let's say you have a population that's kind of around 400,000, and then you have a really low number that's down here like 150,000. Well, that 150,000 is going to throw your average away from that 400,000. So you're going to get a number that's kind of somewhere in between the 150 and 400, right? And that may not be the best indicator of where the majority of your houses are selling. Because if you look at it physically, you see the huge population of numbers in here around 400,000. And then you have this one that's way over here. So realistically, you can say, well, that average is not really indicative of what the population is. So a median price takes that into account. So it takes the outlier. So it takes the population data points that are extreme low and extreme high, and it takes them out of the equation so that you're only dealing with the population of numbers that are grouped. Okay? And that gives you a more realistic idea of what the home prices are. Okay, so that's what a median price is. So when we look at this, I only use the median price. I do not use average price. Okay, so median price, so that we have a better understanding of the real world, what's going on. The median price last year at February was $395,000. So from last year to this year, that's a 31.5% increase. Huge, huge. Okay. All right. So there, that is on there. So let's look at our graphs. So you can see here the new listings. We are higher in new listings than we were in 2021. Okay. But this has a little bit of a downward trend already, where last year it actually from January to February went up. All right, so that's a little different, but we'll see what happens. We should, this should move up next month. It'll be real cool to see. Okay. Median price, you can see here already in 2022 what we showed. So 2020 and 2021 for between January and February, increases in 2020, but not drastic. 2021 was pretty flat. Here, 2022, right out of the chute, bam, $19,455. Okay. Days on market, flat. Multi-chart, you can see here, so the number of new listings and the number of contracts, under contracts, dropped, whereas buying continued to go up. So folks, this is economics 101 for supply and demand. Okay. Inventory going down, demand going up, prices will go up. And that's exactly what we're seeing, right? As long as we have an inventory, as long as we have new listings going down, coming onto the market, the demand still staying high, then the prices will continue to rise, right? I look forward to the day that the prices are steady. When I get on this video and I'm like, look, guys, the last 5 months, the median price has been pretty steady. That's awesome. But we're not there yet, okay? So a couple of messages. One, if you're a buyer, you need to get in the market. Interest rates are down a little bit. The reason is because the war in Ukraine caused the ruble to dive like a rock in water. I mean, straight to the bottom. Because it did that, well, the reason that it did that is because people pulled the money out of the ruble, or pulled the money out of the ruble, out of that market. But what they did do with it is they put their money in a more reliable market, which part of that, where they moved it to, was the mortgage-backed securities, okay? Because that's a reliable, consistent market. So because of inflation, interest rates have gone up a little bit, but when all this money came into mortgage-backed securities, because of taking it out of the ruble and other risky investments and putting it more in safe security investments, then interest rates dropped a little bit. Not a lot, but a little bit. How long that will last, nobody knows, right? But as a buyer, this is an opportunity, right? This is an opportunity. Take advantage of the interest rates where they are now before they start going back up again, because they will. Inflation will drive them back up. And I could explain that whole thing to you about inflation, but I'm not going to. It would take too long. But inflation drive interest rates up. That's all you need to know. We got inflation. It's going to drive interest rates up. They came down because of the war in Ukraine, but I don't know how long that will last. So, first message, buyers, if you're looking to get in now. Prices are going to continue to go. It's going to cost you money to wait. Number two is more of a personal thing. So I have a personal goal of, in the next 60 days, so by the end of June, to help 12 more families buy or sell a home. That's my goal. So I need your guys' help. I need you to like this video. I need you to share this video. I need you to, if you hear friends or family or church members or co-workers or anybody talking about buying or selling a home, please, if you trust me, if you think I'll be in their best interest, let them know about me, tell them about me, pass my number to them, or give me their number. I'll contact them, whatever it takes. Just make that connection for me, right? I make calls every day, but I need your guys' help to do it. I really do. Okay, so that's the second note. So that's what I got for you guys. I hope you enjoyed the numbers. If you have any questions on this, let me know. Just ask me. I'll be happy to expand further. If there's something else you want to see on here that's not on here, let me know, and I can put that together. Okay? All right. I really appreciate you guys, and I hope you have a great day. Bye.